a substantial amount of the money that's left over, that money which comes home to Papa, the owner of the conference, a substantial amount of that will go into gold, almost irrespective of price. I save in gold. I invest in very, very high quality equities, and I speculate on lower quality junior equities. To me, gold isn't a speculative asset class, it's a savings asset class.
Mm.
There are others, probably many of them listeners to you, who speculate on gold. Some of them are probably better at that than I. Most of them probably not.
We've had quite a ride for metals this year. We're sort of past the midpoint of the year, but just. So I'm curious to get your thoughts on where we go from here. Are precious metals moving out of this consolidation phase they've been in? What do you see?
I'm inclined to believe that if there's room in the economy to let interest rates drift higher, that if that occurs, I'm not saying it will, I'm no economist, but if they do, it wouldn't surprise me to see decent relative strength in the US dollar and a softer metals price. Not a prediction, but it wouldn't surprise me. I watched a similar circumstance in 1975. I'm probably one of the few people around that experienced that one personally. But it doesn't really matter in the longer term. I suspect that if they allow interest rates to go up, you'll see more carnage in the bond market. You'll see more carnage in single family residential. You may begin to see carnage in the equity market. And my suspicion is that both the voters and the political class will lose their nerve and cause the Fed to have to lower the interest rate. If that happens, and I can't tell you when it will happen, we will send a signal to savers and investors around the world that the American midterm elections are more important than the sanctity of the US dollar. And if that happens, I think that you'll see a rally in gold and silver that will surprise people, very similar to the one that we had in 1975. So if I had to guess, sadly possessing no crystal ball and not being an economist, stable to higher interest rates will keep gold soft until the US political class changes their nerve, which I suspect they will. When they lose their nerve and take interest rates lower, the impact on gold will be strong. My suspicion is the strength you've seen in gold in the last couple of weeks is due mostly to this bizarre move between the United States and Japan, where the Japanese had ample reserve to defend the currency themselves. But the US government, rather than having Japan sell its existing US treasuries, printed more US dollars out of thin air. In other words, counterfeited them, basically, and lent them to the Japanese in order to defend the yen without having to sell their US treasuries. I think that spoke volumes to those investors who bothered to pay attention.
Yeah, there's been a lot of chatter on about that. And I think we knew that there's a debt problem with the US, but that seemed to smack it right on a billboard. Does that suggest that the treasury market's a lot more fragile than people expected?
That's the only thing I can draw from it. Clearly, the Fed's own calendar, or rather the Treasury's own calendar, the fact that they have to refinance a lot of debt and they have to fund an ongoing deficit, oh yeah, and a war, suggests that competing for bids in the aftermarket with the Japanese, a forced seller, wasn't a pleasant. I mean, why else would you say to the Japanese, who have ample foreign reserves, that you will fund a problem that they have their own funds to solve? Let's say that you had a relative, and this relative had some spending need, and they had a bunch of money in the bank, but you said to them, rather than use your money, why don't you use mine? How does that make any sense at all?
Yeah, I know you like to say that, talk about math, and that math doesn't seem to make much sense unless that you are so concerned about any sort of purchase of treasuries. Is there a risk that others exploit that vulnerability?
I guess.
Or is that a concern you would have?
Well, Japan is probably unique in the sense that they're experiencing more downside volatility in their currency and they're solvent. I don't know that we have other companies, or pardon me, countries in our sphere that both are experiencing the same level of downside relative to the US dollar and also have the ability to fund the solution themselves. Certainly, we extended a helping hand to Argentina, but we extended a helping hand to Argentina because they were empty.
Mm.
The Japanese weren't empty. They had the ability to solve the problem themselves, but we decided to solve them anyway. Our president says, out of friendliness. I hope if sometime in the future I experience some difficulty, that the president feels friendly towards me.
Yeah. One has to wonder. So against that environment, though, then interesting that we're in this period, as you say, a shorter term period where we may see, at least if not sideways, some pressure on metals. What are you doing in that period? Is that an opportunity
Uh,
to get ready for what will eventually be a breakout of that consolidation phase?
yeah, Maggie, I save in gold. I maintain liquidity in US dollars, but I save in gold. As you know, I failed retirement completely. And as I have income, which mercifully I do, I use part of it to buy gold with every influx of liquidity.
Mm,
You were just at a conference that was pretty profitable. When all of the expenses of the conference have been settled and the employee bonuses have been paid, a substantial amount of the money that's left over, that money which comes home to Papa, the owner of the conference, a substantial amount of that will go into gold, almost irrespective of price.
mm.
I personally expect the US dollar to lose about 75% of its purchasing power over the next 10 years. And I expect the nominal price of gold, which is to say the US dollar quoted price of gold, to reflect the deterioration in the purchasing power of the dollar. I can't give you an exact gold quote because I don't have one,
Mm.
but I suspect over 10 years it'll be markedly higher. The consequence of that is that if gold's at 4,400, I'm a buyer. If it's at 4,600, I'm a buyer. If it's 4,700, I'm a buyer. Um, so personally, it's in my interest to see lower gold prices since I will be a buyer and I won't be a seller for a substantial period of time. Many of your viewers, of course, look at things differently. They're concerned about the price of the metal that's already in their inventory.
Mm.
And the consequence of that is that they want higher gold prices sooner. I would say to them only be very careful what you wish for.
Why is that?
The set of circumstances that takes the gold price higher is invariably painful to the rest of your portfolio. If you remember back to the decade of the 70s, what happened to people's bond portfolios or their stock portfolios or their ability to afford goods and services on their pension, their paycheck, or on their savings, the 1970s, except for people like me who were lucky, was extremely painful.
Mm.
What gold really does is it insures you against the depredation of the purchasing power of your savings by your government. Sadly, I feel that's inevitable, but I would just as soon it didn't happen too quickly.
So it's interesting, Rick, and I think this is really important. You're talking about the role gold should play in a portfolio. And
Yes,
that is not to be your meme stock asset that goes up 20%. This is supposed to be something that is a hedge against some of the macro forces out there.
for me, there are other people who are perhaps more adept as traders, or at least behave, or at least perceive that they're more adept as traders,
Mm.
for whom uh, gold is a trading asset. It's a casino chip. I'm not one of those. I save in gold. I invest in very, very high quality equities, and I speculate on lower quality junior equities. To me, gold isn't a speculative asset class, it's a savings asset class.
Mm.
There are others, probably many of them listeners to you, who speculate on gold. Some of them are probably better at that than I. Most of them probably not, but